The Middle Eastern countries who promised to invest over $2 trillion into America have officially decided to pull out of their investments. Let's not forget Donald Trump went to Qatar, the UAE, and Saudi Arabia in the middle of 2025, and he secured huge amounts of investments from all of these countries, but they are now officially withdrawing from these US contracts. And this is leading many people to wonder, what are these Middle Eastern countries going to do with those trillions of dollars of money if they don't park them inside American companies and the US dollar? That's the question I want to explore today. And I want to have a look at what this means for the markets and maybe, just maybe, why these Middle Eastern countries might have already accidentally revealed what they plan on doing with this money. Because as we can see, while the conflict has been heating up and accelerating, some of the largest sovereign wealth funds in the world, in the Middle Eastern world, have been buying more Bitcoin. So we can see Abu Dhabi's sovereign wealth fund has boosted its Bitcoin holdings amid the crypto slump. And again, there are lots of people talking about this. Before we dive into the details, might play a little bit of a video for you guys that surprised a lot of people when the mainstream media is now openly saying the quiet parts out loud.
Added to this position.
Yeah, so you can see that they've more than tripled their position right in the weeks and months up to the sell-off. So, you know, it hit a record high in October, and we can see that they've tripled their position during the third quarter. They disclosed a position at the end of September that was worth around $520 million. And we can see that this is really going to be a part of their portfolio going forward. They're saying that they want to diversify it, and they really see it as the digital equivalent of gold.
And by the way, I should correct myself. I meant to say $500 million, not $500 billion. That would be tremendous.
Well, not $500 billion yet. Before I play the rest of that video, I want to bring you guys up to speed on just how significant the UAE, Qatar, and Saudi Arabia pulling out of America could be. Because let's not forget, everybody was talking about Donald Trump's meeting with the Middle Eastern guys. Let's not forget the US's crypto czar, David Sachs, even met with the UAE officials. And of course, if you're meeting with the crypto czar, you're probably talking about Bitcoin. But let's talk about the magnitude of the money that was promised in 2025. So we're talking about, this is around $600 billion from Saudi Arabia alone. Now, it's not just Saudi Arabia. We have Qatar, and we also have the UAE, who are all right now talking about withdrawing their investments from America. So let's read this. We can see this is from 2025. The President Trump sealed deals throughout his Middle Eastern swing, including 600 billion big ones from the Saudi Arabian government, $1.2 trillion and $243 billion with Qatar, and then a $200 billion investment in UAE. Okay, I butchered that a little bit, but you guys get the magnitude of this. This is massive. This is nearly $2 trillion worth of money that the Middle Eastern countries promised to Trump. But now, all of those countries mentioned, Saudi Arabia, the UAE, Kuwait, and Qatar, are now talking about withdrawing from US contracts. Now, why is this? This is because of the US war. We know that a lot of these Middle Eastern countries, they're not happy about the conflict because, quite simply, economically, it really hurts them, okay? Let's pull up a quick little graphic because I want to show you just how badly these Middle Eastern countries are actually hurt by the Iran war. Before we dive a little bit deeper into looking at the details surrounding what these countries are doing with their money in the first week of March, because things are changing, things are really accelerating here. I think most people are probably discounting how significant this war could be if it continues to carry on. Because these countries that, you know, these Middle Eastern countries, the UAE, Oman, Saudi Arabia, they rely on this very narrow 33-kilometer strait called the Strait of Hormuz. That's the one, the Strait of Hormuz. And now that that's blocked because of the American and Iran conflict, we're now, I think, going to start to see more and more unintended consequences surrounding this conflict. We obviously covered the other day how blocking this strait is a great move from America because it hurts their enemy, China, a lot, but it also hurts their allies. And this is kind of where there's that twist in the story, because now their allies, who pledged $2 trillion of investment into America, are now making huge investments into Bitcoin. So I didn't make a video on this, but as you can see, just 3 weeks ago, in the middle of February, Abu Dhabi's, I think it's their sovereign wealth fund, boosted their Bitcoin holdings all the way up to $630 million. Now, again, at the time, I didn't make a video on this. I didn't think it was super newsworthy. Again, right now, Bitcoin is looking as if it's in a bear market, although it is kind of decorrelating a little bit from the stock market right now. But before we get to that, let's cover this investment because it's a pretty big one. This is Abu Dhabi's sovereign wealth fund. They disclosed a significant increase in its position in BlackRock's IBIT Bitcoin Trust. They now own $630 million. This has increased by 46%, and they hold 8 million shares of BlackRock's IBIT products. Okay, this is very big. As we can see, the sovereign wealth fund of Abu Dhabi, they have $330 billion of money. Again, let's show you how important this is by looking at some of the world's largest sovereign wealth funds. Because I think a lot of people, honestly, people in America and Australia, we don't really think about the Middle East so much because geographically, we're just simply so far away from them. Again, when I was, learning about history and geography at school in Australia, we learn about America, we learn about Britain, a couple of countries in Europe, and that's about it, really. Now, we don't learn about the countries who have a shit ton of money. We can see these are the largest sovereign wealth funds in the world. Look at this. Kuwait has the 4th largest sovereign wealth fund with $693 billion of assets under management. And who's the next one down? This is the UAE. This is really important to be aware of because these Middle Eastern countries have the most amount of money. They have enormous sovereign wealth funds. Abu Dhabi is number 4 on the list, Kuwait number 5, and then number 7 is Saudi Arabia's public investment fund. They've got $700 billion of assets under management. And then Qatar is number 8 on this list, $450 billion of assets under management. And all 4 of them have come out this week and said, look, dude, Big Donald, slow down, brother. This Iran war is hurting us. And this is where I think things are going to get super interesting over the next 2 weeks. Because these sovereign wealth funds, they don't care about the dip right now in Bitcoin. They're buying more. We could see. This is also another news headline that came out a week ago in the middle or the latter part of February that I just didn't cover. Because to be honest, it wasn't interesting then, but now it is when you start to piece these, individual stories together. You might be able to start to see maybe the bigger picture forming. UAE sits on $344 million of unrealized profit from its Bitcoin mining operations. Look at this. The royal family's linked Bitcoin mining rigs are producing about 4 Bitcoin a day, turning state-backed infrastructure into a steady, sovereign Bitcoin machine. This is, by the way, this is coming out of CoinDesk. This isn't some anonymous kid on Twitter with a terrible haircut just making things up saying, I am the source. This is legit news. We can see the UAE is sitting on $300 million of unrealized profit. The country's mining operations are tied to the country's royal family. and they have major partnerships with Marathon Digital's 250 megawatt project, which is producing over 4 Bitcoin a day. Again, 4 Bitcoin, it doesn't sound like a lot, but how much is that in dollars? We're about, let's say we're $70,000 a coin. It's about $280,000 per day. The royal family of the UAE is mining that amount of Bitcoin per day. This is pretty big. This is seriously interesting. This is being discounted. And nobody's paying attention to what's happening, because we know that these countries have been, kind of abandoning the US dollar for some time. I've got a little video that I might show you guys in a moment surrounding, let's say, the rise and the more recent pullback in the US dollar. Because again, I'll caveat all of this. I'm not one of the people who thinks the US dollar is going to collapse or it's going to hyperinflate. I just don't believe in any of that. But the move away from the dollar geopolitically, it has ramifications on US equity markets and other asset classes. I want to, before I dive down that rabbit hole, let's play the rest of the video that I showed you guys in the intro of today's clip.
And getting back to you in London, when it comes to the Abu Dhabi Investment Council, just give us a sense of how this holding of Bitcoin fits in with their overall portfolio. What is their investment strategy?
Yeah, sure. So they're an investment unit of Mubadala. They're kind of run separately, but this really seems to be part of the overall strategy by Abu Dhabi and the United Arab Emirates more generally to become a hub for crypto, as well as just to really become a player in the markets. You can see that Mubadala itself also has significant holdings in Bitcoin ETFs. They've set up new funds such as MGX that have done deals with crypto exchanges like Binance. And you can really see that, they see this as an important long-term diversification play.
And how significant would you say Abu Dhabi Investment Council's move into the crypto sector is, not just for this entity, but for the region at large?
Yeah, well, look, it really gives it growing legitimacy. There's been a lot of questions about, institutional interest in it. Is it here to stay, or is it just a fleeting thing? We do see a lot of sell-offs in the Bitcoin ETFs recently as investor sentiment has turned. But it looks like the Abu Dhabi Investment Council is going to be in it for the long term. And this just really gives it legitimacy when a state-owned fund by one of the richest countries is plowing some of the reserve money into this. You can see that this is something that they really believe in.
Right. I think most people have heard of Mubadala, which you mentioned is the sovereign wealth fund. What exactly is the relationship between the Abu Dhabi Investment Council and Mubadala? I know that you said it's a unit of it, but how did that develop over time?
Yeah, sure. So there used to be a separate state-owned fund. They're mostly invested in private markets, particularly in North America. They've since been trying to diversify. A few years ago, just to sort of simplify the management, they were folded into Mubadala, but they're still run very separately. They have their own investment strategy that's different from the rest of Mubadala. And but you can see that both them and their ultimate parent company, they're both very interested in crypto and are looking for ways that they can play this.
And I think that's the signal here. We can see institutions, they're moving away from the dollar. These regions in the Middle East, they've said enough is enough. The petrodollar is over. We can see this is the percentage of institutions holding US dollars as a share of their foreign currency reserves. That's dropped from 60% to 40% in 5 to 6 years. This is very clearly accelerating. This is happening. And currency transitions, they are not, these linear events. They happen in an exponential function. I think most people are just going to get seriously caught offside when this transition happens, because it's happening right now. And I think a lot of people, the reason why I'm doing this live stream tonight at, 8:18 on a Saturday is because this little visualization, you can see how quickly the US dollar overtook the Great British Pound. The British Pound is the red portion of this circle. And you can see right now, we can see they're at 65% of global holdings. You know, that they make up 65% of the world's holdings in like 1918. And then in 8 years later, they drop down to 30%. So again, in 8 years, you go from 80% to 20%. These transitions, and you can see the US dollar absolutely pull away and dominate after World War II ends. These transitions happen seriously quickly. And I think we're in one of those moments right now when change is happening really quickly, and most people just have no idea what is going on. And most people are just listening to people who are saying, no, but gold and silver have topped forever, you know. But I think what we're seeing is nation state FOMO starting. Well said by McLovin. UAE is accelerating game theory. And we can see these Middle Eastern guys, they're withdrawing money from equity funds because of the war in the Middle East. This is the signal here. This is the unintended consequence. We know that China made huge investments into Iran. We can see the Iran war is unsettling China and its ambitions. Most people don't even know, but China has invested a ton of money into Iran over the years. Why? Well, I'm sure you guys can read in between the lines. They're not too fond of America. And now what is going to happen if these Middle Eastern countries pull back from the investments they promised to Donald Trump? That's the more interesting conundrum. Are the Middle Eastern countries going to go back to China? Because let's not forget, they already kind of partnered up with China. They tried to partner up with the BRICS post-2022 when America froze the treasury reserves of Russia's central bank after they invaded Ukraine. These Middle Eastern countries, they kind of pivoted towards China. But in 2025, they came back to America. Now, I think the more, like, what are they going to do now? If they move away from America again, are they really going to go back to China and the BRICS? I really don't know. The one thing we know for certain is this doesn't look like it's ending anytime soon. We can see, I saw this headline come out today. As the Gulf attacks continue, Iran says that Trump ended any sort of chance of de-escalation, which is, again, really concerning. War's a horrible thing. But it's what you see at the conclusions of long-term debt cycles and currency transitions and economic resets. Now, again, what's really interesting about these, you know, a lot of people would ask, why are these Middle Eastern countries so pissed at Donald Trump? Well, in October 2025, we can see phase 1 of an American ceasefire was signed regarding Gaza. As you can see, this was it was big news. You can see 2025 peace in the Middle East. This was massive news. There was supposed to be a ceasefire. This is a whole conference. Some of the biggest leaders around the world gathered together and they said, look, let's chill out a little bit. No more war in the Middle East. And we can see phase 2 of this peace plan actually got rolled out. Look at the date of this, in January 2026. And then 6 weeks later, Trump, well, we all know what's happening. Trump is having serious conflict with Iran. I think that kind of adds a little bit more explanation to why these Middle Eastern countries are literally thinking about ripping up contracts that they have with America. And this is massive. This isn't a couple $100 million here or there. This is $2 trillion of capital that now might not be flowing into America. Which is why I always encourage you guys, look, nobody knows what's going to happen tomorrow. Nobody knows what country is going to do what. I always just tell you to watch what they are doing. Never watch what any country is saying. And we can see Abu Dhabi's wealth funds now hold $1 billion worth of Bitcoin. They're quietly sitting on hundreds of millions of dollars of profit from mining Bitcoin, and now they're moving away from the dollar. Do you really think they're going to buy Chinese yuan? I seriously don't think so. Might talk more about China in a moment, but if you are looking to copy what the UAE and Saudi Arabia is doing by silently mining Bitcoin, I always tell you guys the downsides that come with buying Bitcoin from a centralized exchange. I personally prefer to mine it. Again, both are options. Both have trade-offs. If you do want to learn more about mining, highly recommend you book a call with my friends over there at Blockware Solutions. Right now, they are running a buy the dip promo. That means you can get 40% off some of your Bitcoin mining hardware. And again, most people don't even know, but if you actually buy Bitcoin mining hardware as an American, you can get 100% tax write-off because of depreciated taxable gains. Highly recommend you book a call with them. I'm not the expert on this stuff. I'm not a financial advisor. I'm just an idiot on the internet with a shit haircut who's in serious need of some sleep. So again, go book a call with those guys. You can book a free call and learn more about why this could be your last chance to front run nation state FOMO, because this is the next chart that I mentioned that I wanted to show you that I think is really telling. Bitcoin just crashed by 50%. And a lot of people were like, oh, the smart money is out. They don't care. Well, the price of Bitcoin crashed 53%. The total holdings by ETFs, I think it drew down by something like 5%. ETFs are holding. What else is happening? Again, look at the data. Don't look at the narratives. Bitcoin on exchanges is absolutely dropping like a rock. Even though lots of OG whales are supposedly selling because of quantum and this and that, you can see this trend is only accelerating. And it kind of dropped off a cliff this weekend. Just this weekend, we saw 60,000 Bitcoin leave the exchanges. That's kind of insane when you think about it. What is it? 450 Bitcoin is mined a day? In the past week and a half, 60,000 Bitcoin. So you can see this is 2.761 million. We're down to 2.7 million. That's kind of insane. That's 120 days worth of supply ripped off the exchanges in the past 2 weeks. I don't know about you guys. My math isn't great, but if somebody's buying 120 days worth of supply over 14 days, number will go up eventually. Now, I always advocate you never buy off anyone. Answering this comment in the chat. Again, you raise a good point. Why buy Bitcoin from BlackRock? You shouldn't. Why buy Bitcoin from Michael Saylor? Again, I trust Michael more than I trust Larry, but you're buying shares of a company. You can be diluted. Maybe MicroStrategy gets nationalized and the US government decides what to do with your shares of MicroStrategy. Much more likely than most people think. This is why I always tell you guys, look, don't buy stocks. Don't buy ETFs. It's all bullshit. Buy the real Bitcoin. Put it in your own hardware wallet and self-custody it. It's really not that difficult. This is why I always encourage you guys, if you do need your hand held in the journey of taking self-custody of your Bitcoin, book a call with my friends at the Bitcoin Way. They are your dedicated one-on-one Bitcoin coach. They can help you take self-custody of your Bitcoin, set up a hardware wallet, or just maybe make your communications a little bit more private. Again, everybody's a little bit scared of governments peeping into what we're saying on our smartphones and laptops this day. So again, the Bitcoin Way can help you with anything you need. And while you're taking self-custody of your Bitcoin, do not make the single biggest mistake that everybody makes with their Bitcoin hardware wallets. I think there's probably millions of people who have bought a hardware wallet, but they write down their backup to these hardware wallets on paper. Come on, guys. Don't do that. I always encourage you to just check out what Stampseed is creating. They make these titanium plates that are specifically designed to keep your Bitcoin 12 or 24 words safe forever. As you can see, they survive fire, they survive floods, they survive hurricanes. They are great to hide as well. Wink, wink, nod, nod. I may or may not have done that myself. And they're actually running a winter sale right now. That means you can get up to 30% off on the selected products or kits that you want to buy from Stampseed. Make sure you use promo code Luke15. That's going to give you an additional 15% discount on anything you want to buy, and buy it while you still can. I want to address, again, this chart right here. This is the slow and impending supply squeeze that we've been following on this channel for years now. You can see this has been just slowly accumulating for years. And let's be very clear. This has never been about short-term Bitcoin price predictions. I have said for a very long time that the only chart that you need to follow is this one right here. And when the number of Bitcoin approaches 0, you are going to see price swings and price moves that is going to absolutely melt your face. Again, just to prove how long I've been talking about the supply squeeze, this is from an article I wrote in 2021 highlighting why Bitcoin will be adopted like a technology in an exponential wave, and why we won't be seeing things like power laws, or I actually wrote this article at the time to debunk the stock to flow model, which was very popular in 2021. But as you can see, I actually highlighted the shift in the supply shock in 2021. You can see this big green box that I marked. I said for the first time in Bitcoin's life, coins have started leaving the exchanges consistently for a year and a half. This was as of March 2020, you can see. Zooming in, we can see nearly 300,000 Bitcoin have flown off the exchanges in the past 3 months. Again, this was written in 2021. Since then, this trend has only accelerated. More and more Bitcoin have left the exchange, and most people are just not ready for what is going to happen to the Bitcoin price when fewer and fewer Bitcoin are left on the exchanges. Again, I'll remind you, again, this is the Bitcoin multiplier effect, which was at somewhere around 2.5x in 2021 when I wrote this article. Right now, this is up closer to 6.5x. So that means for every single $1 that wants to flow into Bitcoin, it pushes the market cap up by 6.5x. There's a reason why I'm kind of bringing this around full circle. Because if the UAE, Saudi Arabia, and Qatar are now pulling the $2 trillion of investments that they promised to America, where is that money going to go? Let's play hypotheticals. If half of it, $1 trillion, wanted to flow into Bitcoin, what does that mean? If you got a multiplier effect of 6.5, that means we would be adding $6.5 trillion to Bitcoin's market cap. And we would go from, right now, I think we're just a tad over $1 trillion at $65,000 a coin. You add 6 trillion on, we're looking at what? 400,000-ish dollars per coin for Bitcoin. This is just how the multiplier effect works. I think a lot of people struggle to wrap their head around how exponentials function. I think things are going to get really interesting here as we continue to see nation states and governments accelerate their FOMOing into Bitcoin. Things are going to get really strange here really quick. That's the only thing I know for certain right now. Nations are becoming more and more centralized. Absolutely, well said. Just making sure I hit all the comments in the chat. Speaking of changing nappies, I better go and change some nappies right now, guys. Apologies for the late live stream tonight. I'm a little bit tired, been in the hospital all week, but here we are. Huge news. Want to do a quick live stream. I'm going to respect your time. I'm going to end this one here. I'm going to wish you all happy Sunday. I'm going to see you all in the next one.